Yo, what's going on everyone? Welcome back to another video. Today's lesson is going to be on how to backtest. Now pay attention to this one because a lot of people do have questions on what are the specific rules on how to backtest and everything. So generally with how you backtest is you need to first off you need to have that plan, like the TradingView premium plan. And for that, when you do get that plan, you can use the replay mode on whatever time frame you want. If you don't have that plan, the most or the biggest time frame you can use it on, or the smallest, is the daily. So if you try to use the replay mode on the 4 hour, it generally wouldn't work. So yeah, make sure you guys have that TradingView plan. If you can't get it because you don't want to pay, you can get a 30-day free trial. Just type in on the next tab TradingView 30-day free trial, and it should work out. But generally, this is how we backtest. So we're somewhere random on your USD. I don't know where we're at. We're somewhere random, and all we're really going to be doing is identifying trend and structure. So trend is clearly towards the upside, right? Now from a macro perspective, we can say that we're obviously bullish, right? And in order for us to be like 100% swing trade bearish, we would need to break past this macro lower high, or higher low, sorry. If we check the weekly time frame, you can even see that this is our last high, higher low, and then a higher high. So in order for us to become bearish, we'd have to break past that. Now IPA wise, we do have a lot of imbalance resting over here, so it does make sense for why Euro USD needs to drop to come fill in that imbalance, but overall we don't know much. Now going down to the daily time frame, we can see that price is in a range. Now price is in a range, and this could either mean two things. We could either be seeing a possible distribution schematic. Let's go and type in Wyckoff schematics right here, and let's take this one together. So PS, so that's accumulation, sorry. Let's go to distribution. Boom. So this distribution, first thing we're looking for is the PSY. So let's go to the line chart and let's go to the 4 hour and let's try to find the PSY. So the PSY is generally that last pullback before the move up that has a significant drop. So technically speaking, this is my last pullback, big move up, significant drop. So this is my PSY right over here. That's exactly where my PSY is. Boom. Now let's change this down to like 16, make that a little nicer. Now after that, we're looking for the buyer's climax, and obviously this is the buyer's climax because the PSY is followed by a big drop to the downside, and that's what we have right here. Now from that buyer's climax, we have that automatic rally where the market finishes the buyer's climax. So wherever the BC is done selling off, that's where the AR is going to happen. In this case, we have our automatic rally where the market pushes up to give us a secondary test of any little bit of supply, to retest any little bit of supply inside of this buyer's climax right here. So the market was generally just testing that. Now after that ST, we're supposed to be followed by a sign of weakness. Now if we do look at the candlestick chart, we can kind of see that we do have a sign of weakness right over here. We have this last little higher low, BOS down. So we have our sign of weakness out here because the market ended up breaking structure, right? So I would mark this as my SOW. All it needs to do is break some type of structure towards the downside that led towards the ST. Now from there, you're supposed to be followed by a UT, an upper thrust after upper thrust, that is clearing out liquidity of the BC and the ST. Because if you think about it, price did kind of just generate a little bit of liquidity right over here. So it would make sense for why price needs to come back up to take out those stops, right? And that's where the UT was formed. The UT happened right over here. And then after the UT, we can see that price ends up, consolidating a little bit right here, consolidates, and then we're followed with a UTAD right over here. Boom, perfect. So we're followed by that UTAD where the UTAD breaks and closes above the previous UT. Now what ends up happening is we're supposed to be, getting a UTAD test, right? And I don't think we got one quite yet over here. I mean, it technically did go up to test up to here, but we didn't really get a proper UTAD test. And like I said in my previous videos, in Wyckoff, we're looking to enter on that last point of supply. So boom, we have that final break of structure, that final move down. Where's our last pullback? Remember, we're looking to enter on that last pullback before the move down. In this case, right over here, we can see price was generating a ton of liquidity of the lows. So boom, price breaks out of the liquidity of the lows. Now our last point of supply would be right over here because this is that last institutional up candle before the move down that one cleared liquidity and two finished its pullback. So generally for sells, we'd be thinking about selling over here, right? But that, remember, this is just a 4 hour opportunity to sell, not a long-term thing. So let's see what price ends up doing, right? Let's see if the price reacts off of our zone or not. Now, boom, price is near our zone, but not quite there yet. Alright, let's play this out. Okay, boom. Price comes into our zone, but it does not quite react off of it like we're expecting. So clearly this Wyckoff is improper, and we're not really focusing on this Wyckoff anymore. Now, what price could do is come back up towards this institutional up candle before the move down, because remember, there is also an institutional candle right here, and this is generally that first expansion down. This is where the market retraced, and then we have that second expansion. So this could be our second expansion where price might react off of there. So let's see what the market does. Okay, so generally we're not really showing much noise towards the downside. Overall, the market is kind of just moving in a consolidative manner, and structure is still bullish. So I could still take a buy up to this sell and then take the sell back down. So let's look at structure wise right here. We can see that overall structure was pretty lower. On the micro wise, we had a low, lower high, lower low. Now the market ended up breaking past this lower high right over here, creating a proper break of structure right over here. And as you can see, the candles themselves closed above that area of interest right there. So the candles did close above, creating a higher high. So at this point, I have two levels of interest. I could either focus on this expansion, this is the retracement, and then a re-expansion back up. So I have two areas I could have my focus on. In this case, I'm going to be focusing on this last institutional down candle before the major move up, and let me show you why. So we have this institutional candle. Now we have imbalance near the institutional candle, right? So we have clean imbalance here to here, really clean towards the institutional candle. And not only that, but this institutional candle also swept liquidity. Right over here, we have that clean equal lows that the market created, and the market swept it right over here. This was the liquidity gap, and then price continued up, giving us a break of structure. So we have a bunch of confirmations. One, we have break of structure. Two, we have bullish market structure in our favor. Three, we have liquidity grab. Four, we have IPA for why price needs to come back into this area of interest right here. And five, we would have the Fibonacci discounted level as well. Let's take our fib out. Let's run it from the low. Technically do from this low up to this high, and you can see that price is in our discounted buy zone right here. So we have a total of about 5 to 6 confirmations for why price needs to come back down into this area. Now price makes its way back down here. Now I'm not sure if it will let me go down to the 15-minute. Okay, I cannot go to the 5-minute. Let me just go back. Where was it? I think we're right over here. Okay, boom. So price comes into our level of interest and does give us a small intraday opportunity. So it moves about like 36 pips, right? And then ends up reversing. So this is a perfect example of the market disrespecting an institutional candle. And what this tells you is this is actually important information. What this is telling you is that price wants to use a different institutional candle that's lower. So now what I can see is that there was liquidity resting over here, right? We had liquidity equal lows just over here that the market needed to take out. So that means price is going to have to go back down into a lower institutional candle. And where is our next IC? Well, it would be just over here. We have this last institutional down candle before the major move up. And this is where we potentially have our focus on, right? If we can check the 8-hour time frame, see if there's anything clean. Not much. 12-hour wise, yeah, not much. There's not much information that we can really take out of there. So boom, price comes into our area of interest from here. And I can go down to the smaller time frame to show you the schematic, but if we were looking for that schematic, it would look like something like this. We would be either looking for an accumulation schematic where price would be showing us our little PS, selling climax, automatic rally, secondary test, spring, last point of supply, whatever. Or what we could do is simply just stick to market structure, which is look for that little sell side market structure form, and then get it broken, and then retest the original expansion, and then have our entry right over here. In this case, I can go down to the 15-minute. Let me see. Okay, I could. Perfect, I could. So right over here, let's see if we can see any Wyckoff. Let's go to the accumulation schematic. So accumulation, we're looking for a PS. Let's look for that PS. Go to the line chart. All right, so technically speaking, the PS is supposed to be that last retracement up before that move down that's followed by that impulsive buyers action. So this is technically our last impulsive move down, and then followed by a bunch of selling pressure or buying pressure. So I would technically say that this is my PS, and then from here this is my selling climax, my seller's climax, right? And then we have an automatic rally towards the upside? Yes, we do. Let's check the candles. Let's check the candles chart. Selling climax. We have an automatic rally right over here. Remember, if I could use the 5-minute time frame, this would be a lot cleaner, but sadly I can't. Now after that automatic rally, we do have a secondary test right here, and then we generally don't do much. We don't create a secondary test in phase B, and the market just goes up. So the Wyckoff here is not really proper. So we're not using proper Wyckoff here. So in this case, we wouldn't really use Wyckoff, but instead we could just stick to market structure. We can see price created this low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, right? So we have this little downtrend structure forming, and then price ends up breaking above it. So at this point I could say, okay, we have a proper break of structure of the highs. I could do it from here rather. We have a proper break of structure of the highs, and then we have an institutional candle that the market created that was the cause of that break of structure, and in this case it would be right over here. So what I would do now is I would change my area of focus from, you know, the 4-hour POI up to this 15-minute POI right over here. So so let's go back in time right here. Once we see that proper break of structure, at this point I would have my area of focus right here with a sell limit, or sorry, a buy limit, stop loss at the low. Make sure you account for the spread, and then TP just the next high, because you know, TP could be the next high depending on how you trade. I change my mood a lot. Sometimes I like swinging, sometimes I like scalping. Just depends on my mood, to be honest. But market tapped us in. Now it did almost stop us out, right? So this is where, you know, evaluating your spread comes in. You gotta account for your spread. So if spread was like 2.4 pips and I just left it up to here, I would have got stopped out, right? But if I accounted for that, my stop loss would have been down over here, and the market wouldn't have, you know, stopped me out. So it's important to account for spread. And now from here, the market completely just alliterates and goes up towards the highs. So generally, let's just delete all this and let's stick to what's simple. The market generated a bunch of liquidity over here. We had all this liquidity, price had to break below and take out. Liquidity cleared. Now that means money's at the lows. Now this move over here grabbed a ton of money, right? Because there's money resting over here, and this is that move down. The reason this move down happened was because there's money resting over here. So the market generally went down to stop out or take out all that money that rested over here. And what we did is we highlighted our institutional candle on the 4-hour, because one, our confirmation for this is that price went down to grab liquidity. So this institutional candle is in the form of grabbing liquidity. Two, we have a break of structure, right? We have this really clean break of structure of the highs right here, BOS top. Even if you take it from the wick, right, you still have a clean break of structure. The candles closed above it. And then 3, we have momentum, we have imbalance. 4, we have our Fibonacci price, I'm pretty sure. Yeah, we have our 88, 78, and 70. So it's in our discounted level. We have about 5 to 6 confirmations, and target wise, we're literally just targeting the next level where there's imbalance or liquidity. So overall, because we are in a bullish market structure, and the micro structure is now switching from bearish to bullish as well, because remember, we were moving pretty bearish, like for example right here, we're moving pretty bearish over here, right? But then boom, once we start breaking this little retracement, the market goes up, because remember, the market moves in phases of expansion and then retracement. In order for retracement to be over, we need to see the smaller time frame start breaking this previous retracement structure, and that's what happened right here. Focus your point of interest all into this area right over here. The market created a low, lower high, low, lower high, low, lower high, lower low, higher high. And once we have that break of structure of the retracement, this is your identification that now the market is in its expansion mode, and price is going to continue its bullish momentum towards the next highs. So assuming we entered somewhere over here, I'm not even sure where we entered, but let's just, you know, say we entered there, and TP would generally be either the next area of liquidity, or you could target the next high, which would be always over there. Now let's see what ends up happening. Okay, so I don't know, I think we did get stopped out over here. Let me go down to the 15 minutes, investigate this out. Okay, so yeah, the market did come back down to stop you out. You know, that shit like that's gonna happen, but I think if you accounted for spread, even if spread, you get stopped out. So yeah, shit like that happens at the end of the day, it's whatever. But yeah, you can't avoid that. Now overall market does end up smacking your TP. And yeah, now let's delete everything. Let's reanalyze what we're seeing for Euro USD. So now the market broke past this previous high point right over here. We broke past that previous high point. We saw price ended up reacting off of this previous expansion move up and then continue going higher. So at this point, I don't have much information. I can't say I'm going to focus on this level or this level because I haven't seen like any, consolidation or anything. For example, if the market started consolidating, then I would rather be focusing on this area of interest rather than this one, right? But I need to see that consolidation happen first. So let's play this out. And now we're seeing some information. We're seeing some decent consolidation where price is creating liquidity of the highs and the lows. So in this case, I would set a line right here for LQ below, meaning liquidity rests here. And then we also have liquidity resting at the highs. My bad, let me just change this quick time. Liquidity at the highs. Now we know the market is gonna have to make a move down, but let's see this. Let's go down to the 1 hour time frame. Let's analyze, or the 2 hour, or whatever time frame. Let's analyze the structure. So boom, now the market took out the liquidity of the highs, right? We broke structure right over here. So rather, if we go down to the 1 hour, I think we want to be focusing on that expansion move up that was the cause of this BOS. In this case, I would expect price to come all the way back down because this is the start of that move, and one, there's liquidity resting over here. So let's go on the 4 hour again. Let's just analyze what the market is going to do. And okay, look at this. We have clean liquidity, somewhat type of liquidity just resting over here now. The market is generating a ton of liquidity over here that we're going to have to take out eventually. Go back to the zone. And generally, we're expecting price to come back down into this area right over here. Alright, now the market came back down to tap into this liquidity right here. We created one more touch. And like I said, we're waiting for price to sell off. We're waiting for that move down to grab all that money. Now, price comes into our area right over here perfectly. Let's see what price ends up doing. Now, it does end up reacting, so let's investigate this area. Let's go highlight this. And let's go down to the 15-minute or the 1 hour and let's see what's inside this area. Now, surprisingly, there isn't an institution candle right here. A really clean institutional candle that price did create right over here. But remember, we also had some type of liquidity on the smaller time frame, hence why the market ended up wicking down. So at this point, if we look at price action from here, we can go down to the 15-minute and we can analyze the microstructure and wait for the microstructure to become bullish. Like I said, all we're waiting for is to see price change from this into this. So we have liquidity at the highs just resting over here. So at this point, I would put my bad, I don't know what I just did there. Liquidity at the highs, play this out, and we just want to see a break of structure. Now we have that break of structure right here. We have a pretty decent BOS forming right here, BOS top. Now we still don't see really any clean institutional candles right now, so we'd have to wait. Now on the 5-minute time frame, areas like right over here and areas like right over here would be really clean, but I can't go on there sadly because trading view is gay. So yeah. Alright, so in this case, price and didn't tap us in. It automatically just shot up, which is completely fine. So just go back to the 4 hour and analyze what we're seeing. Let's just reanalyze what we're seeing right now. So price does its thing, ends up going bullish. Right, play this out, and boom, now it's coming lower towards our area of interest, which was, like I said before, was right over here, because this is that last institutional up down candle before the move up, right? And there's also a ton of imbalance inside of these areas, like here, we have a bunch of imbalance, so we have a reason for why price needs to come back down there. Now boom, perfectly price taps into the pip of this area. Now let's go down to the 15-minute time frame. I hate going to the 15, I'd rather use the 5, but sadly I can't use that, or even the 1. Let me try to use the 5-minute. Okay, perfect, I can. There we go. Alright, so we do see some consolidation happening over here, and I can easily tell you that there is some type of accumulation schematic, but sadly we cannot look at that. But whatever, we've seen that price create liquidity at the lows, liquidity cleared of the lows over here. Now we still have this bearish structure that we need to see invalidated. So boom, price breaks up really quickly out of our area of interest after it tapped in right here. Now if I was using the 1 minute time frame or the 2 minute or the 3 minute, we could have easily found a really clean schematic. For example, right here we have a break of structure, BOS top, we have that break of structure of this previous lower high, and then the market taps back into like some type of institutional candle over here, and then it does its thing. But overall our area of focus was correct. Right here our area of focus was correct. Now stop loss would have gone here if I was using the smaller time frames, but I can't. Now if you're scalping, you know, easy 17 pips for you, there you go. If you're going for crazier targets, just go on the higher time frame and just target the next high, which would be right over here, I guess, right? And then the market ends up, you know, smacking your TP and it does its thing. Now let's go back to the 4 hour, and yeah, and let's go and look at this. So overall the market does become pretty bullish from here, but look at this. Now after we do become pretty bullish, what did we do? We end up breaking structure once again. Now on the 1 hour, I think the candle did close above. Clean, the candle did close above. Now from here, shit, I gotta stop pressing replay really quick. From here, let's identify our expansion and then our retracement. 1, we have our expansion. 2, this is our retracement. 3, we have our second expansion. So overall we found that we labeled our expansion and our retracement. Now remember what I said, we're looking to enter on that expansion, and in this institutional candle right over here, we have that really clean IC that the market created, that we're waiting for price to tap into, and then we also have another clean institutional candle right over here at the bottom. So notice how both of these institutional candles are at the bottom at the start of the expansion. No matter what, they're always at the start of the expansion, and because we do that, that means that we're entering on a discounted level. Now from a fibs perspective, take it from this low to this high, we can see this one is in our you know, our discounted level. This one is right shy above our 70, 61, 50, whatever. But if you take it from this low up to this high, then it's also inside of our you know, expansion level, or in our discounted zones. So from here we wait for price to come into our area of interest. Now let's go down to the 5 minutes, see if there's any schematics for us to enter on. Now clean structure we do see right here. We do see that price did give us that break of structure of this previous lower high. We have this little high, lower, sorry, we have this high, low, lower, high, lower, low, and then price ends up breaking out of it. Now from here, like I said, we're focusing on the open of the expansion that caused that break of structure. So we have institutional candle right here, and we have another institutional candle right over here. And we simply set limits for both of these, and we can see price taps into the first one pretty decently. And now target wise, depending on how you target, you could either target the next high, which would be a pretty clean 5 to 1, or you can just go for the next imbalance target right over here. Well, let's see what ends up price doing. Okay, I don't know if this stopped us out, I'm not too sure. Let me check this out. Nah, so it did not stop us out. So let's just go to the 1 hour to play this out a little quicker. And TP does end up getting smacked. It missed our stop loss just by a little bit, so we did not end up getting stopped out, which is perfectly fine. So that, like I said, that's where you have to make sure you're accounting for spread, because look at that, it missed your stop loss just by about not even a pip. That's like 0.2 pips, and that's how important it is to account for your spread. And that would have been a really clean 14 to 1 risk to reward ratio. And then price obviously does its thing and continues going bullish from here. Let's play this out. The market just obviously continues going bullish. Now me personally, I would because I'm a swing type trader, I would just target the next high, which would give me a really nice, like, what's that? That would have been a nice 66 to 1, and I've taken trades like these so many times. It's really simple. Let's delete all this once more and let's reanalyze. Now we break structure over here, and now we have another area of focus. Let's look at the 8-hour time frame, and we have the same exact level. Let's go to the 12-hour as well just to make sure. All right, boom. 12-hour time frame, we have a really clean institutional candle over here and a clean institutional candle over here. Now, like I said, this is our first expansion. This is our first expansion. This is our second expansion. Both of these zones caused that break of structure. They both caused that break of structure. Now, Euro did create some type of liquidity over here that it might end up selling off to it could sell off all the way back down. My bad, I don't know what just happened, but it could end up selling all the way back down and take that out. Well, we don't have that type of proper confirmation quite yet because overall structure is still bullish. So price comes into our area of focus, At this point, let's go down to the 15-minute, and it sold off pretty deeply. We didn't enter right away, remember, but it sold off pretty deeply. Now, right over here, price taps us in, breaks structure, and then we would have had our entry filled at this point, right? Because we would set a limit somewhere at this institutional candle, but price would end up falling. Now, let's go down to the 5-minute and let's analyze once again. Let's see what price ends up doing. We don't see much confirmation quite yet. We do see that the market is creating lower lows, lower highs, but now we have that break of structure, but the candles didn't close above. This is just a really volatile wick. We need to see the candles itself close above. So technically, if you did go to the 1 minute, I'm not sure if it allows me to, but this area of focus would be valid if the candles did close above. If the candles did not close above, then it was not valid. But at this point, assuming it did, let's set a limit right over here with a stop loss at the low for about 3.5 pips, and just target the next high or the next high over here, right? And then okay, so let's see what happens. We already did get stopped out, but let's just see where this trade ends up going. Okay, boom, let's just do this. So we do end up getting stopped out. Price goes our way, but then stops us out just over here, pretty shy. Shit like that happens, like I said, but whatever. Now from here, the market's just consolidating, and what we can see is that the market did generate a lot of liquidity right over here. So generally what I'm doing is I'm trying not to use the lower time frame too much unless I'm using it for entries, right? Other than that, I'm just sticking to my higher time frame. So the fact that we didn't respect this area over here, that tells me that, all right, price maybe have a second level that it wants to focus on, something like over here. Now higher time frame wise, we just generated a ton of liquidity right over here. You have a bunch of liquidity of the lows right here, resting, equal low, equal low, equal low. That increases that this institutional candle zone could possibly be the correct one. Now, okay, so it ends up missing our zone just by like, what is that? Just about like 4.5 pips, which is pretty annoying, but whatever, shit like that will happen. And then from there, it comes back down and then it completely tanks. So let's look at structure now. We did end up breaking this previous higher low. What does this tell you, that the fact that we broke this previous higher low? Well, this tells you that price is still overall bullish, because look at the higher time frame. In order for us to be considered bearish, price has to break this low over here. That's what we're gonna have to do for price to become bearish. Now in this case, price is not bearish yet, but if we look at the daily time frame wise, what we do see is that price did expand crazily from here, right? And what we also see is that there is an institutional candle over here, and there's also a clean institutional candle over here. So we have two valid points of interest. This is the first expansion, retracement, and then re-expansion. So let's see how price ends up, reacting out of one of these zones. So in this zone, it does not react nicely. It did give you a decent intraday opportunity for like, what is that, like 28 pips, whatever. But let's see how price ends up reacting out of this one. Now this is where I get really angry. So if you did refine it, yeah, so it's important to use the daily time frame as well. So use all the different order blocks you can. Use the 12-hour. I use the 12-hour a lot. It's really clean. If you use the 12-hour, you would have refined it up to here. And the price, really nicely reacts off your zone of interest. You could use the 8-hour as well, but these are my major time frames for institutional candles. The 12-hour and the 8-hour, they're the best time frames for institutional candles. So that's generally how I backtest. And remember, while you're backtesting, keep a score of where you're entering. So for example, have a little separate sheet, maybe a Google Docs or a notebook, and write down all of the trades you're entering, which ones you lost, which ones you won, how much percentage you're risking, how much percentage you gain. For example, right over here, if we were entering for this trade right here, price would have overall 47 pips for a next target of over here. So my risk to reward right here is I'm risking about, I would say about like 2% to make a total of 11%, right? So you're making 11% and only risking about 2%, and then TP does end up getting smacked. So at this point, I would write down, winner, 11%, and yeah, that's basically it. Winner 11%, and then write trade number 1, trade number 2. So we'll go over a couple more examples on GBP USD. Let's delete everything right here. I'm gonna close my eyes, or let's just do something like this. Alright, boom. Randomly over here. I did a random. Alright, I did a random, so there's no way I can really look at this. Alright, randomly, let's go. GBP USD, overall 100% bullish, no question about it, easily 120% bullish. Now I did see that price was creating equal lows over here. We ended up taking those equal lows out. The market retested that institutional candle that was the cause of this break of structure right here, BOS top, and then the market continued going up. So generally this is telling me that the market is just creating a lot of liquidity and overall moving higher. Now we created the same thing happened right here. The market created liquidity right here, equal lows, market breaks structure, or it hasn't broken structure yet, but let's see if it does that. So now we did break structure, and on the smaller time frame, like the 4 hour, the candle itself would definitely be closing above. At this point, this area of focus would be valid, and let me tell you why. This area of focus and this area of focus right here. One, because I don't know what that was. This is that expansion move that was the cause of that break of structure. We took it in the form of liquidity. So this institutional candle did grab liquidity. A lot of momentum was followed by it. We have a Fibonacci retracement. Discounted level, I don't even need to measure it, but I could tell that it's already in the discounted levels. Overall structure is bullish, it makes sense. So let's look for what price ends up doing. Okay, so at this point, the market about missed our, our entry just shy about like 19 pips. It is pretty annoying, but it is what it is. We move on to the next one. So I don't see much opportunities quite yet. Let's go down to the 4 hour. Let's look at what the 4 hour is saying. So 4 hour structural wise, let's delete all this. 4 hour structure wise, we end up breaking this previous high right here, and we do the same exact thing. We generate liquidity this time though. We have liquidity of the lows resting below our area of interest. So that means that this area of focus that we have, this last institutional down counter before the move up that broke structure, is valid right now, and so would be this one right here. So now I have two potential areas of interest. First expansion, retracement, second expansion. Let's look at what price ends up doing. Creating a ton of liquidity, and then boom, price taps into our area of focus right away. I don't want to go down to the 15-minute. I'm scared it's gonna restart it, and then I'll be able to see what's gonna happen next. So let's just stick to this. And then if we were, obviously our stop loss would be 43 pips, but sadly because we can't use the smaller time frames, it's gonna be like that. But target would just be the next high. And TP did end up getting smacked. Now me as a swing trader, I would be on the monthly time frame looking at monthly targets, something like that, right? I love holding trades long term. It's just something that I do, and it's looking addiction. I can't stop. But yeah, so that trade was pretty successful. So what I would do now is I would write down right here. We'll go down to the 4 hour. Where's that? I don't know what that is, but my bad. But at this point I would write here, put my entry right there, stop loss at the low, and then TP, let's just put it right here. Now this would be a 6-to-1, so I would write down 6-to-1 outcome winner, risk 1%, target 11%, right? Or 6%. I'm not even sure, to be honest. It depends on which lot size you're using, so this is just random. So that's one winner, right? And let's see what the market ends up doing next. So let's delete everything. Let's reanalyze. Price tapped into this institutional candle already. This institutional candle is no longer interesting. Now the market did grab liquidity too. Remember that we grabbed liquidity. So right over here we have two areas for focus now. This institutional candle that ended up taking out all these lows over here, that grabbed all that liquidity of the lows, and then the market ends up going up and doing what? It also grabbed liquidity of the highs. So this institutional candle and this move itself is really important. Now, two, we have a bunch of imbalance right over here. Price created a ton of imbalance. And we have another area of focus, which would be right over here, because this is our expansion move up, our retracement, and then our expansion. So I would expect price to come back to one of those levels of focus, but now GBP USD just completely goes flying at this point. Now it completely goes flying, and at this point we see that this is our last institutional down candle before the major move up. So now I'd be focusing, or I'd move my focus rather from here, from these two levels to this level, and look for small intraday opportunities. Now let's look at this. So price comes in to our zone, taps us into the pip. Stop loss would be just at the low for about 14 pips. Target would be the next high, and target smacked 134 pips, 9-to-1. So at this point right over here I would write winner outcome winner 9 to 1 or 1 to 9, whatever you want. Risk 1%. Act like you're actually entering it, like literally act like you're entering it, and then target 9%. Just write that down right here. Boom. So that's generally how I do this, and then boom, our take profit gets smacked. Now from here the market tanks. It tanks down. Now we clearly wouldn't be focusing over here. Actually no, we would. So our area of focus now would be over here, but price, I wouldn't enter honestly, because I want to see a deeper retracement at this point, right? Because if the market, you know, used this one for a little small intraday opportunity and the market went back down, that clearly tells you that overall, like, micro structure, we're still bearish, right? Because look at this, we're still bearish. If the market moved quickly off of this, then that would tell me that, all right, price wants to go higher. But the fact that we didn't, it means price wants to use a lower institutional candle. So I would be more comfortable using an institutional candle over here or over here. So let's see what the price ends up doing. And okay, all right, boom. So price taps into this area right here. Let me delete this. Now I saw a bunch of opportunities to enter for buys over a buy over here. For example, right here we see a pretty clean break of structure on the smaller time frame. This move down, this move up, broke structure. Price comes back in, taps into this institutional candle, and then goes up. But like I said, we're not looking to catch that small move. We're looking to catch that major impulsive move up. So price comes into our zone, and then from here it moves pretty nicely. And just look at this. Look how clean this is. Inside of this, if we go down to the 15-minute, we see a bunch of structure get broken. Right here we see structure get broken. BOS top, right? Let's go down to the 4-hour once again. And once we see that structure get broken, where would we, you know, be looking to enter? Well, we'd be looking for institutional candles inside of that impulsive move up. So now our area of focus would be this institutional candle and this institutional candle. So we would set limits for both of these. As soon as price taps us in, stop loss just at the low, target the next high. Target gets smacked, market, you know, does its thing, whatever. Boom, TP gets hit. Now it comes down to your second area of focus. Triggers you in. Now I'm assuming you did get stopped out if you did put your stop loss over here. That's why I'm starting to put my stop loss a little bit, you know, lower than the last low. This does help you get, you know, less stopped out of your trades. But then the market generally goes and let's see. Yeah, overall I am pretty sure boom, overall takes your profit. But this is a loss, so I would write down outcome loss. What is this? This is a 15 to 1. 15 to 1. Risk 1%. Target 2%. Right? So that's basically generally how I would, you know, backtest. All the rules, remember, I'm entering with my rules. I'm not just randomly entering out of this institutional candle over here because I see it gave me a, you know, a good move down. My rules is trade with the trend. If that's my rules, I have to follow it. And yeah, that's basically how I would, you know, backtest GBP USD. Damn, we actually came pretty far. That's pretty crazy. But this video is really long. How long is that? What is that, like? Damn, 38 minutes. Alright, I'm gonna call this video a day now. I'll see you guys in the next one, and peace.